I was looking at the title of the talk, Building Tomorrow's Biotech Investors. And I think I'm just going to get right into it. So you've all been investing for quite some time. And we know a lot of the time that investors, whenever there's a big macroeconomic shift, like, Trump's tariffs, for example, there is a discourse that runs through the private investing world where it's like, well, we need to pause and maybe reassess. But I feel that, and maybe you can tell me if I'm incorrect, that when you have your mandate and you've raised your funds already, of course you want to take into consideration these external catalysts, but it shouldn't prevent you from underwriting and looking at different opportunities. How would you say you think about that in your investing right now, given that this is all really relevant? And is financing risk, the future financing risk of companies, something that comes to mind?
The bar is higher. The discipline of building companies, it's interesting because all of us have gone through different macro cycles, and I always find it to be the companies that were undisciplined to begin with and raised far too much, didn't really have anything to begin with, and the valuations were insane. Those get impacted quite quickly, and you got to lead with substance, and you have to think in this way. So there's some elements of market correction that bring us back to a norm and a balance that I think is healthy and it's good, and it's something that you will just have to face and experience. Building a company isn't easy, whether the climate is good or bad. You have to be thoughtful, as Kirsten said. You have to know that this is happening at the later stage. And with my portfolio companies, the best companies are still raising. They're still able to achieve the rounds they're supposed to be able to achieve. But every single person across the board, even the most disciplined of companies, has had to take a hard look at their finances and their runways. And my advice has always been, if you don't have to raise, don't raise. And too often, I think we glamorize things in our industry as raising lots of money is seen as a good thing, hiring lots of people is seen as a good thing. But in practice and reality, for those of us who've been builders, it's not. And you be really thoughtful, strategic with why you need to do what you need to do. VC and raising capital, whether it be non-dilutive or venture capital, there has to be a purpose behind it, not doing it for the sake of doing it, or that the industry or your investors are telling you to do it. It needs to be to an end. And as that bar has gone up, there's no better time than being a seed investor or building a seed company or pre-seed company, because you're starting in a really healthy foundational space. And so the idea here is, if you're able to raise in this environment, you should be in a comfortable position when markets do get better. And the reality is, for those of us old enough here, the markets will recover. We'll get back to a sense of norm. It will take a while. So you just have to be disciplined and make sure you surround yourself with people who think this way. So it's not all rosy. You need to be very thoughtful, but at the same time, there's a good way of building great companies, even in these ecosystems and the times that we exist.